Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today I'm going to show you how I'm using one stock, and in 2024, I've made over $25,000. And look, I've been using it since 2023. This stock is a 3X leveraged ETF, and it trades in such an absolute juicy range that I use it constantly, knocking down thousands of dollars. I'm going to show you where that stock is trading right now and a trade I just put on for this Friday. See, I do this every single week. We do not stop. We keep putting on the trades, knocking down $25,000, and it's only March. We are absolutely knocking it down using yin. Yin is the 3X leveraged ETF to the large cap China stocks. And we're looking to generate fat premiums. 3X leveraged ETFs do that for us. Now here's the deal. What I'm going to tell you is it's not risky. It's volatile, but it's not risky. And we're going to talk about that here because a lot of YouTubers will tell you to stay away from 3X leveraged ETFs. 3X leveraged ETFs that follow indexes. So they'll tell you they're risky. What I'm going to tell you is they're volatile. And when you're in the selling premium business, what are you looking for? Volatility. I'm not saying you can't make good money trading Microsoft, Bristol Myers, Merck, 3M. But here's the deal. If you want some juice to your trades, you want to make $300 instead of $100, well, you're going to have to add some juice. And I add 3X leveraged ETFs. I use TNA, TQs, FAS, and Yin. And Yin is my favorite. In fact, every one of my kids' accounts have Yin in it, and I have control of some 11,000 shares. And I'll tell you what, generating $1,000 paychecks. I want you to strap it on. See, I'm in retirement, man. I retired when I was 55 just 2 years ago. And we live off of covered calls and dividends. And at the end of this video, I'm going to show you the dividend I'm buying, the dividend paying stock I'm buying, because we have to fund our retirement with passive income. And I'm going to show you the dividend stock I'm collecting right now, and we'll talk about it. You'll absolutely love it. So look, let's go ahead and get to this. I am fired up because Yin is a stock that's trading for under 18 bucks, and it's absolutely got a trading range, which I'm going to show you now. Yin is one that I use all the time, and that's just 2024. I can show you 2023, make your jaw drop. Hey, look, if you like anything you hear today, I want you to subscribe to the channel. I come back every single week, show you timely and relevant covered call trades and dividend purchases, because there's a lot of people out there that are getting to retirement or they're in retirement, and look, man, they got to generate cash flow. You know, they're out there watching these TikTokers getting lucky, got a horseshoe up their ass. But at the end of the day, they want to see a successful active trader. And that's why you keep coming back to my channel, because I show you real trades that are happening right now. I want you to focus on the dates. These are expiration dates. And you can see that we are trading it every week, every month. And to be honest with you, I've been trading it for a year. This is 3 months. And that's $25,000. Yin is one you want to consider. Now, hey, look, before we get going, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, that's what I'm doing, man. I'm showing you how I use Yin to generate $1,000 paychecks. You can see them right there. And what I love to do is use Yin because Yin trades in a trading range. And we love trading ranges because when they fall down to the bottom of the range, we can get involved. Moves higher, we can write covered calls, have our shares taken away. We take all that money you see right there and we buy dividend paying stocks. And I'll tell you what, it is my cash printing machine, because I literally printed this money by writing the covered call, and we bought dividend paying stocks that are going to pay me the money. Now, this is what I love. I love using this stock because it has a trading range. And this trading range is beautiful. All of my members get my trade alerts. And I've done about 35 of them this month. They get them all. They see my trades. And they see all the dividend paying stocks I'm buying. I have a membership. Go to cptdashboard.com, click Upgraded Dashboard. I have a 1 free month offer for you. Hey, look, I'm excited because I'm knocking it down living in retirement on covered call writing, and then buying dividend paying stocks so I can collect passive income. I have these little worker bee dividend paying stocks going out and making money for me so they will pay the bills so I can live the good life. But we have to put in the front end work first, and that's writing covered calls. So that's what we're going to do with this stock. Give you a real quick breakdown on what Yin is. It is a 3x leveraged ETF to the large cap China stocks. And in fact, the index that it follows is the FXI. Basically, that's the 1x version of the index of the large cap China stocks. You can see that it holds all those large stocks like Alibaba, BidU, JD.com. And to be honest with you, as Alibaba rolls, so does Yin. So I love investing in both Alibaba and Yin, and I found that to be an interesting correlation. As Baba rolls, so does Yin. So that makes it great because I'm watching Baba and I could watch Yin as well. So what I like to do is this. I like to use these 3x leveraged ETFs because what I'm going to get is 3x the premiums when I write a covered call. I love collecting fat premiums, and then we basically manage the trade. Well, the only way we manage the trade correctly is if we know its trading range. And that's what we're going to talk about today because it has an absolute wonderful trading range, if you're asking me. We can go all the way back to when this sucker fell off, coming into the market sell-off late last year. And then basically, as it turns the corner, we think we're going to get some traction and go higher. Alibaba comes out with some bad news, says it's not spinning off its storage business, and next thing you know, it falls down. Remember, the index is largely weighted by all these big China stocks, and China's economy is not doing that well. So it falls as the greater stock market moves higher. So I've been trading this thing because notice how it has actually rallied off of this bottom. Well, there's no coincidence there. That's when the Chinese government started coming out and saying things like they were going to shore up their economy. And of course, Wall Street buys it. Every China stock seems to have found its support. Now, whether they go higher or not, it doesn't matter to me. I just want Yin to trade in this beautiful range. And what we're going to do is tighten up this range so you can see it. See, right now back here, you may not see it. But when you draw back, you can clearly see the range. We bellied up right here around 14. Now, 14 is a key number here because it did a double bottom. It basically told Wall Street that it's going to double bounce at that number. Now, regardless of what that number is on the FXI, this is the number we're looking for Yin. And that turns out to be 14. As the greater markets are going higher, and so are the China stocks, Yin finds itself at 18. It's trading anywhere as high as its last high of around 21.50. So now we're putting in that range, right? The range is anywhere from 14 to 21. And we're going to trade it in and around that wide range. But what I'll tell you is this, I think that range is a little tighter now. Because when Yin broke resistance right there and it went higher, you could see it tested it right here and it moved higher. 1750 could be its new support. So that's what we're looking for. And notice it has peeled off. Now what I'm looking to do is get involved anywhere between 20 and 1750. And I feel comfortable that if Yin were to fall, it'll probably fall to 1550 and then it could fall to 14. But we've been here before, so I'm not going to sweat it. We're going to trade it. But for right now, I believe this is our current trading range, anywhere from 2050 to 1750. That is the range. That is the sandbox that we're going to work with, and we just want it to trade within that range. Now, what we're going to do is this. When it's trading in and around 1750, we could use two opportunities. We could buy the shares and write a covered call. It's pretty simple, right? Yin's trading at 1750. We buy 100 shares, going to cost us $17.50. We go ahead, tell the greater stock market, we're going to give somebody our shares at 18, just 50 cents higher. They're probably going to pay us for a 30-day trade some $1.25. So when you do the math, you're going to collect 50 extra cents for the stock move, plus a $1.25 for the premium when we get that covered call premium for holding our shares for 30 days. Well, that's a $1.75. And a $1.75 on $1,750 invested? Yeah, that's right. That's 10% in 1 month. That's the juice I'm talking about when we talk about 3x leveraged ETFs. But again, are they risky? I'm going to tell you they're not. They're volatile, but they're not risky. Now, if you think Alibaba's risky, then it's risky. If you think JD.com or BidU are risky, then yes, it's risky to you. But if you don't, and you think those companies, and by the way, did you know that Alibaba has almost $1 trillion in revenue? I mean, I just checked the chart on this. They have over $900 billion in revenue. Now, they're not as profitable as they should be, and the stocks should be higher, but hey, it's trading where it's trading, and we're going to live with it. But if you think large cap China stocks are not risky, then you might want to get involved with Yin, which tracks that index. And it's 3x leveraged, so you get 3x the juice. So instead of getting 1x the premiums, you get 3x. And I'll tell you what, if you identify its stock trading range, you won't feel so skittish when it finds itself at the bottom, because this trades just like anything else. What I love about this is when it tried to break resistance, and then on the third shot it breaks through, it comes back. It comes back to support and bounces higher. See, this is what we're looking for. Right now, it's gonna test that 1750. Well, what I'm here to say is this: if I'm gonna get involved with this sucker, it's gonna be at 1750. And that's what we did. Let's go back to the trade I did. And you can actually see I did a 1 week cash secure put. Quite frankly, I think this is a dynamite trade. We're going to get involved when it's trading at 1833. I picked that 18 strike, got paid 55 cents. It does expire this Friday, March 29th. We loaded up with 20 contracts, or if I'm assigned the shares, I'm going to be assigned 2,000 shares. That's going to pay me $1,100 upfront cash flow. And stick around, we're going to use that $1,100 to buy a dividend paying stock. Now that's the plan. That's a cash secure put, where what I did is I upfronted the money. I told the greater stock market that I'll buy your shares at 18 and I'll give you 5 days to slap me with your shares at 18. You're going to pay me 55 cents a share. I did it on 20 contracts, which means I might be obligated to take 2,000 shares. But based on my technicals on that charting, I believe I won't in this short 5-day window. And remember I mentioned I send out all my trades as trade alerts? Well, this is it. It's a 9-day trade, actually includes 2 days of the weekend, so really it's a 7-day trade. You could see that I believe Yin is bouncing off of support, and I just believe right now with the markets where it's at, this thing is probably going to bounce, probably not going to be assigned, and it's probably going to move higher. If I'm assigned to shares at 18, I feel comfortable because I believe its trading range is now 1750 to 20. And if I'm assigned the shares, we'll immediately write a covered call. Absolutely love letting the members know when I get involved in a trade. I love breaking down the trade, telling them what it's all about, what is the profit projection, and I love telling them what we're looking to do and why I got involved. This skin in the game makes $26,000 if this trade comes clean in just 5 days. Because I've used this stock this year, making some $25,000. Look, it's less inexpensive stock, right? To get in the game on this stock, all you need is $1,800. It is 3x leverage. You need to do your due diligence, and I'm not recommending it. What I'm telling you is what I'm doing, and what I love telling the members is what I do. You could see these are all my trade alerts. And oh, by the way, that's only March. That's only March right there. Now look, I'm going to bore you with the WiMAX video because we just talked about this last time, but I want to focus on this, okay? Because this is a stock I think you should consider. So the WiMAX family of funds, the basic idea is this. There's this company, they've got a lot of option traders, and what they decided to do, take a company, and what they're going to do is they're going to write calls and puts against that stock. And that's what they do. They would put cash into that stock. For example, if you searched any of their YieldMax funds like Coney for Coinbase, Tesla for Tesla, they have all of these. I use PYPY for the PayPal version. And that's generating 73 cents a share because they're writing calls and puts against PayPal stock. PayPal's a bank, but it has a little more volatility than most banks. And it trades in a range like a bank. Because of that, they're generating 50, 60, 70 cents per month. PYPY was my very first dividend tree. I bought 1,500 shares using covered call profits. The covered call profits I showed you with Yin. And we took those and we bought PYPY until I had 1,500 shares. Well, now we turn our focus on WiMAX. What YMAX does, it invests in all of the individual YieldMax funds that focus on companies. So inside of this fund, you will find Coney, Tesla, AMZ, and all the other ones. PYPY, SQY for Square. And I'll tell you what, it's generating 56 cents a share per month, and it's pretty steady. It's much more steadier because it's weighted differently. They're not doing calls and puts like the individual ones are. Now, what I'm going to show you is this. I take all of my covered call profits, the ones I just talked to you about with yin, where I make $1,000 a week. Once I make that profit and that yin trade is over, I will take that $1,000 and I will buy equivalent shares of YMAX. And that's what I've been doing. You can see right here, and they're very odd numbers because it doesn't matter. If I make $300, I buy that much of YMAX. If I make $500, $600, $1,000, I buy that many shares of YMAX. Look at this last trade. This last trade, I made $2,500. I think that was on a covered call on Super Micro. As soon as I was finished with that trade, I went ahead, loaded up, got 115 shares of YMAX. We are diligent in what we do here. And I call this my money tree because I'm here to tell you this. At the end of the day, we all would love to live on our dividend paying stocks, right? You don't have to go to work. You just keep collecting dividends. Well, you have to start somewhere because they don't just magically show up. And a lot of people say to me, look, John, I don't have disposable income to be buying these stocks and waiting for these dividends to come in. But here's the deal. You have the ability, if you have 100 shares of an optional stock, you can write a covered call and then you take the profits and buy your dividend paying stock. You literally printed money, right? People don't like me saying that because you're not printing money. What else would you call it? I have a stock. If I don't do anything with it, I don't print nothing. I write a covered call. Immediately I get paid in the per share premium. There's the printed money. You have to be disciplined now and buy your dividend stock like I am. Hey, look, man, I am marching. I actually use this as language. The march to 1,500. We're not stopping at 1,200 or 1,350. We're going to get to 1,500. And then once we put this one to bed, this little tree, this little dividend tree sits in my dividend garden next to my PYPY dividend tree, for which it has 1,500 shares. And next month, because look, man, I'm blowing through this. You have to look at the dates. This is just during this week how many shares I've accumulated. So I believe this week I'm going to have 1,500 shares easy, and then we're going to pick our next stock. And I already have that one dialed up because that stock is trading a little bit low. I love it. They pay about 40 cents. Hey, look, I'm not getting greedy, man. I don't need $1.50 like Coney puts out. Everybody out there running to the fattest dividend. That's not how you do it. You want to find those good and steady dividends. You want to understand how that company derives its dividend. And once you do that, 40 cents. If you're an old school closed-end fund trader, you know 40 cents per share per month is the mother lode. And these things are paying 40, 50, 60 to 90 cents to even more. But here's the deal. This is the new age of dividend paying stocks. They're using options. This is brand new. And they don't have much of a track record. Think of this. Instead of having a team that goes out and buys bond or high yield debt or using covered calls where they buy shares and write a covered call and a buy right, they don't. They use options. They have teams of option traders and computers that will buy calls and puts. They never own the underlying. And they use different hedging things like U.S. Treasuries. You really need to go to YieldMax and take a look at any one of their individual stocks and see the underlying. It's not the stock. They're writing naked calls and puts, and they're experts at it. Now, hey, with that said, you may not believe in that. You may think this is all hocus pocus, snake oil, and will go away. What I'm here to tell you is get on board because this is the new wave. You don't have to own the asset to generate the near-term income. And I'll tell you what, when you pay the 70 cents to a buck, you open some eyes. And all these new companies are coming out. YMAX is just one of them. And hey, look, man, I'm not pimping YMAX. I just happen to have about 3 or 4 other funds. And right now I'm focused on YMAX, the ETF that's generating about 56 cents per share per month. It is the new age of dividend paying stocks. Do your due diligence, look into them, but more importantly, find your March. And what I mean by that is find your determination to grow and plant your dividend garden. Now, I didn't tell you I was going to do this at the end of the video, but we're here at March 23rd, one more week into this month, and look at where we're at. We are absolutely banging. Didn't I just do a video where I'm making $57,000 in March? Well, we're turning that into $70,000, and when this month is over, it should be at $75,000. That's right. The month of March literally shows up as my fourth highest year total. And it's just a month. We are absolutely banging on all cylinders in this market that's going higher, and we're taking advantage of it. But here's the deal, and I know you're going to ask the question in the comments, but can you do it in a bear market or in a market that's falling? All I want you to do is take a gander at this bad boy. This is 2020, when the markets absolutely got cut in half. We can generate real positive cash flow in an up or down market. We may not be able to make as much, but we're still going to make money. Still putting cash on the table. I want you to learn how to write covered calls, sell cash secure puts, and more importantly, take those profits and then plant your dividend trees. I can help you. I have a membership, cptdashboard.com, click upgraded dashboard, get your one free month. I would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.